Welcome back to the Home Care Experience with TNA. I'm Amy Taylor, joined as always by my co-host, Troy Brooks. Today, we're diving into a fascinating and timely topic, the current state of the home care industry as we wrap up 2024. From increased scrutiny in hospice care to evolving challenges in home care providers post-COVID, there's a lot to unpack. Whether you're a seasoned professional or exploring the field, we'll discuss trends, regulations, and opportunities shaping the industry today. So grab your coffee, settle in, and join us for this in-depth conversation on the home care experience with TNA. And we are going to go over today what we feel like the current state of the industry is, of the whole global home care industry. And just for relevance, depending on when you're listening to this and when we get it released, it is currently the week before the Christmas of 2024. So it's kind of important to have that perspective because we all know how quickly our industry changes, but this is where we are now. So what do you got for us?
Well, that's
Troy?
actually one of the things I was thinking about when I was thinking about how to discuss this. What I am working on today, I wasn't working on a year ago, as far as for different types of clients. Transactions, yes. Purchases, yes. Now, how they're handled, that changes. But the situations that the clients deal with on a daily basis that they come to me for, they change all the time. Presently, like hospice, for the past year, hospice has, this has been going on for some time. There's a gradual increase in scrutiny for hospice. For the longest, hospice got maybe a pass because it was a very, it's a unique program. But now there's a lot more scrutiny. A lot of that could have to do with the amount of private investment in hospice. I'm not sure. But I mean, for the longest, it was a nonprofit driven business. So, they're getting more scrutiny. That is sort of almost like the frog in the water that you slowly heated up. You worry about that. But for instance, now there's a 36-month rule that applies to hospice transactions, hospices. Meaning if you have been certified, then once you're certified, you can't have a majority change in ownership. And that's very broadly defined for 36 months. They're also, when new hospices come online, their billing is scrutinized. They go through what used to be like this. Sometimes you would have probe and educates where they would send out requests for records, additional information, ADRs, and then you would supply those. And if you passed, you're fine. If you didn't, you went to another level. And there's something similar going on with that with hospice right now. The question I have is like, where is that going to end for hospice? I don't know. There's going to be another step at some point down the line in the next 2 or 3 years. You're going to see some probably, I don't know if you'd see like a formalization of that type of scrutiny. It's going to increase. It's not going to go away. There are sometimes when there's increased scrutiny that slacks off for various reasons. Sometimes the government, the contractors, they'll bite off more than they can chew, and so they have to back off. And so, but also sometimes the scrutiny is driven by particular things, like in home health. When face-to-face first came out, there was a lot of confusion over that. So years after that, there was a lot of scrutiny over how that was used. So with hospice, right now there's a lot of scrutiny on startups. There will be more scrutiny on the established operations as time goes on. What that looks like, I don't know. That's one of the reasons we're doing the podcast, is to talk about how things will look when we get there, and when we know what things might look like when we get there. Yeah, and sharing that. So, yeah. But now, for hospice, for the home care industry, and for hospice and the rest of the home care industry as a whole, what kind of changes have they had, say, in a county since COVID?
Well, we all love COVID, right? Not really. I'm exhausted still. So, these healthcare providers, kind of in a very broad sense, a lot of them got handed a lot of money. And I remember, and I am not good at remembering dates, but I remember April 10th, 2020, that was the first tranche of Medicare money that went 2 bank accounts to Medicare certified providers. Mm-hmm. And that was right when we were working on applying for those PPP loans. And I feel like that first round had already closed because if you remember, like all the big companies got those. And so then we're trying to work with small banks to get our small clients funded. And I had a client and I was literally on a Zoom call with my accounting buddies. And so I've got a small group there where we came together and we said, look, let's, and I think this happened a lot in home care too. And I think it brought us all closer together. But the thought was, let's come together and figure this out rather than everybody figuring it out individually. And so I was with my accounting buddies and that's what we were doing. And we were all on a big Zoom call and we were trying to work through these PPP loans and rules and stuff. And in the CARES Act, I feel like it was like 800 or 900 pages long. And the PPP loan was the first 12 pages. Well, we didn't get to the rest because we were stuck there. So I get a text message from a client who's still a client now. And she says, hey, it was like $410,000 or something in her bank account. Hey, I think my PPP loan came in. And I was like, that's not what that is because we hadn't even gotten the loan applications hadn't been processed yet. And so on my other screen, I had an email up and we start seeing emails come in from clients, text messages, and then the forums started lighting up. And I told my accounting friends, I said, guys, I got to go. I don't know what's going on, but some shit's hitting the fan. I got to go figure this out. So I jump off. And so at the very end of the CARES Act was the provider relief funds. And so it was those, grants that were issued. And then there were and then it did end up years later trickling down to the states. And then the states rolled out formal grants that you had to apply for. But that very first round, you didn't even apply for it. It just showed up. And like we were just talking off camera, you've got clients still sitting on money because they're scared to spend it because the government's like no strings attached. But then we know that was all a lie because then all the reporting had to be done. But just kind of fast forward.
There's always strings attached to money.
Yeah. I mean, and I don't remember her name, but she was the secretary of HHS, federal level. Mm-hmm. And she was saying, no strings attached. This is money for you to do what you need to do. And we were all like, yeah, I'm not buying that. And so then when we started reading through it, it's like, oh no, it's got to be for this and that. I remember we did a lot of training with it. And then those reportings are still going on. And so there were reporting periods. And I think for our group of clients, I think we've got everything reported at this point. But there were some, we missed the deadline on one provider. They had a hard time getting back to us. But we were thinking, well, it's like a cost report or a tax return or anything else, just file it late. But they had that stuff shut down. So then, we were contacting congressmen to get that rectified. And they did reopen it to let people file the report because it was like, well, if you didn't file, then you owed all that money back. And so we got that.
Was this on with the feds?
Okay. With the feds. So we got that handled, but we've done all this tons and tons of reporting. But I think what's more important and what's more relevant to the conversation here is, I saw a lot of different uses. I saw some clients really take advantage of that money, invest it into their business, get themselves out of debt in some cases because they were able to, legally do that and cover, because you could cover payroll with it kind of thing, right? So if you're covering payroll, then they could take what they would have paid for payroll and use that cash to pay off lines of credit. That's one I can think of specifically. But then I also saw people take every dime that was given to him, that was offered to him, including like the big SBA loans that you could get, and spent it. Spent it legitimately, but didn't think it all the way through. And also kind of like spent every single dime. And it's kind of like, I go back to an individual, right? Let's say I want a vacation home and I could really squeeze out a $2,000 a month mortgage. Well, I probably should not do that. If I can just barely get by, it's kind of like, buying a nice car. If you want a BMW, you got to be able to afford more than the car payment because their maintenance ain't cheap, right? So like all that stuff, right? And so they just stretched themselves way too thin. And what we're seeing now is I do feel like there are still a good lot of people making good money, but I feel like those that were with us pre-COVID, through COVID, a large portion of those are struggling now because they're still paying COVID prices. They're still paying COVID wages, meaning everything went up, right? Like all of our costs went up. The cost of a nurse went up. That never came back down. And
generally, when costs like that go up, you rarely see them come back. It's just
in the accounting industry.
It's the nature of the beast.
So in my hiring, it actually did come down.
Okay.
There was a little bubble bust, and I had my final COVID hire, and she didn't work out. And I think she got a sticker shock when she went back to the market because when all the CPA firms had staffed way up because there was so much work to do with all of that, that then once all that was over, they laid a ton of people off. So our wages have come down a little bit, but your staff, that just meant I could hire new staff at a lower rate. But your existing staff, you can't go take away those raises that you gave them. No. And the minimum wage went up and all that. So the costs haven't gone down, and I don't feel like the providers that are struggling, some did as best they could. It was great. But I guess what I'm trying to say is there are still a lot of people that are really struggling now that money is gone, and they're having to learn a new way, because I know I was spending a lot more money during COVID because I had more money. So like I had a business coach. It was a very exorbitant fee, but it was great and I needed it and it worked well. But then once that, I had to get rid of some of those big expenses. And that was 2024 for me. We cut out a lot of things that we had been doing in 22 and stuff. So
I think that there are, even in the legal business of hiring staff and everything, things have shifted, and they're slowly. You have to understand. I mean, everything was turned on its head during COVID. And so it's sort of like when we're talking about. You'll hear us talk about me, especially with enforcement. On the enforcement side, whether it be licensure, fraud, or whatever, there's a pendulum that swings one way from one extreme to the other. And the same thing with the economy is slowly the build back as far as coming back to a more consistent or stable normal is taking longer than I think most people expected. I talked to somebody this week who the same thing, that as far as his business, it just hasn't come back to everything else is looking fine, but it's just not come back to what he thought it was going to be.
I think a lot of it, and this gets a little out of my world of expertise, but also another piece, like our Medicaid providers. I think a lot of people that were getting Medicaid benefits, so census was really high for providers, and a lot of those benefits have been terminated. Right? Because the emergency, the health emergency went away. So it took a lot of people off of that benefit.
Well, that's one of the interesting thing, that's an industry-wide issue. Moving along to like just different areas of home care, and all of most of my experience with this kind of thing is in Texas. The unique issues that we're facing, well, some are federal, some are state. Home health right now is pretty, there are always changes, but as far as any extra scrutiny, it's getting the same, it's at a normal rate of scrutiny.
They're used to it.
Yeah. And so that there's not much, nothing really unique happening in that area. In Texas, on the Medicaid waiver side, meaning there's personal assistance services and then there's pediatrics. Those are both getting a lot of scrutiny from their there are some exchanges that folks that providers can that they can become a part of, that then they would get that information on when a patient was hospitalized and that kind of thing. I know only enough about those to be dangerous. I found out about those from the Texas Association for Home Care and Hospice. I think it was Marissa Machado who first mentioned that to me, or maybe Rachel Hammond who first mentioned that we were in a group discussing that. So, but that is one of the areas. Now, my favorites are like when the attendant goes and they're continuing to provide services on paper and the consumer's in jail. That happens too. That is, and you know, and that there are, one of the things we're hoping to share with the podcast are unique challenges that each of these areas of home care face. And in this attendant care, one of the biggest challenges they face is if someone goes out there to provide services to person A in the home, but there's also person B, maybe person C. They wind up providing services across the board. It happens. Mm-hmm. And it's just very hard to monitor, very hard to police. And it presents its unique set of challenges. But that's one of the reasons they might be continuing to go out to the home, provide services, is that the person they're providing them to is not there, but the other people are. And there's also just straight up fraud. Yeah. That happens. On the licensed home health side with the pediatrics, you have the MCOs for scrutinizing things, and then you have OIG, the Texas Health and Human Services Commission's Office of Inspector General. One of the interesting things that has sort of come up that is causing a lot of audit challenges or billing audit challenges for the pediatric side are electronic medical records. There are some quirks in there. There are some benefits, in fact, that people use templates. Well, sometimes those templates, if they're not used correctly, make it look like you're using canned notes, and that the visits are not unique, and they don't have unique information for each visit, each patient visit. And so that's a problem. There are MCOs who are zeroing in on that. Now, you got to understand, for these auditors, whether it be a problem with your notes, and usually it's in the documentation, it's in the clinical documentation that they find fault. So in those situations, the reviewers, once they get to the thing that renders the claim non-payable, they stop. And if you have a pattern in your clinical notes, such as you're using templates for everything, and the templates are the same from visit to visit, and they declare them all invalid, well, they don't have to really look any further. It's done. It's an easy review for them. It's what I call the low-hanging fruit. Mm-hmm. I mean, they've gotten their low-hanging fruit. They're done. With that case, they're done for the day. So that's the challenge that we're looking at right now. We have some of these cases. The ones that I'm dealing with are so early on in the our challenging of the audits that I'm not really sure. I'm not sure where we're going. I'm optimistic, but we haven't gotten a resolution yet, so I'm not really sure what that's going to look like. Now, on the YG side, we have, on the pediatric private duty nursing side, they are looking at certain modifiers that are a particular modifier that's used for vent patients. They have been auditing pediatric private duty nursing providers for the past several years. And that's that. You'll see that with Medicaid a lot. They will, I think a lot of times what they do is they get information from their year-end report. Their state fiscal year ends on August 31st every year. And so by the time the fall rolls around, they're starting to see what the numbers for the previous year were like. And if there was utilization that was really high in one area, that gets a lot of scrutiny, especially if it pops up. If there's a sharp rise in utilization in a particular year, that gets a lot of scrutiny. And so then they spend the next year and further looking at that particular service. So with these, they've been looking at this particular modifier, and what they do in these situations is they develop one way to review these, and they stick with that way. It's like they learn how to make a box and they duplicate that box. And it makes sense. I mean, you're dealing with the same set of facts in each case.
But by God, don't let the provider use a template.
Exactly. Sorry. But they exactly, that's this very same thing. They are basically duplicating the last investigation or review they did, and sometimes they make the assumption that they're the same, and they're not. But I mean, the one provider is the same as the other, and they're not. There are a lot of similarities, but they are all very, very different. Even ones in the same field. One pediatric private duty nursing service provider is very different from another. They're different. Well, I see the differences. I don't know, but maybe other people don't. They see just the similarities. But that is one of the things that we're struggling with on that end. I have several cases that are in the works. We don't know where this is going because we're still waiting. I'm waiting to hear a good reason from OIG for my clients why some of these should be denied. We haven't heard that reason. We're still waiting on that. We know it's coming, but I'm not sure. And the reason I say that is with this very subject, what I've heard from OIG staff, the things that they find don't make sense, like orders not signed or a lack of orders for ventilation, and they're using the modifier. And this is a very heavily regulated, and there's tons of oversight with pediatric private duty nursing. There's prior authorizations for one, so they couldn't even provide the service and bill for it without an order. So there are little things like that I am just really curious how it plays out. And so with all of these, I think with the waiver programs, the next step is that you're just going to get more and more scrutiny from the MCOs because it makes sense. They have to be accountable to HHSC on where the money goes. HHSC has to be accountable to the feds on where the money goes. And so with that level of someone looking over your shoulder, they're going to keep looking at how you're spending the money that they pay you to care for patients.
And I feel like on the, you mentioned it, on the hospice, on new startups, one of the challenges I'm seeing is the, what do you call it when they review the claims? The first batch
ADRs?
of ADRs.
Sometimes that particular program is different, but traditionally they have these probe and educates that basically they send out.
They're supposed to be trying to educate you on how to do your billing. Those have seemed very, again, I don't do billings, I don't get into that, but I see the cash flow implications. And it seems like that's been hard for some providers to get past.
It's been really hard because if you have, one of the things about if you have a small census, that means you can really, really focus on that census and make sure everything's right. However, if you have one or two things wrong, it's sort of like intensifies the volume of those mistakes. I don't know if that makes sense.
Because if you have 10 patients and two charts are wrong, that's 20%.
Yes, exactly.
Versus 100 patients with two charts wrong. Yeah. So I see a lot of that. And where we're at on the, like I said, I have found it interesting in the global home care. We used to be predominantly skilled home health. Then it shifted where there was a lot more PAS. And now, and hospice was coming on real slowly, but now I feel like the number of hospices that we've got coming on service has gone up quite a bit to where we're now 50-50 between, I don't know the split, if I'm splitting between skilled home health, PAS home care, and hospice. It's not a third, but it's a lot closer. There's a lot more hospices in the market. And so I'm not seeing near as many home health startups as we see.
That is true. I mean, for a while, that was a big, for consultants that we deal with, that we know, that was a big, they had sections of their business that was set up dedicated just for startups.
I mean, I did talk to one, now that I say that, I did talk to one yesterday, and they are starting up a home care, and they're not doing Medicare. They're going to do insurance and private pay. There's a gravitation to private pay.
That is, I think people are finding out that you can't do the same kind of work without Medicare or Medicaid.
Yeah. So they're going to do commercial insurance and private pay. I was like, okay. Yeah. And then they can add Medicare later, right?
Yeah, they can.
Yeah, they can. They just got to get Medicare certified.
Yeah.
And what happened? So we don't call it a provider number anymore?
I still call it a provider number. It's called a provider number PTAN, but then most of the time.
It's a CNN, CCN.
Well, a lot of times even with Medicaid or or just CMS.
Yeah. I still call it DADS.
Well, yeah, that's sort of easy. And then trying to explain, but people don't understand when you're dealing with the Texas Health and Human Services Commission, it's so massive. It's like, because they do the license, they do the contract, they do the oversight. I mean, it's just, they contract with the Medicaid managed care organizations. It's just it touches everything.
Yeah.
And so,
what about the reimbursement side?
They have.
It comes from HHS.
Yeah. If they don't, they contract with TMHP to administer the Medicaid program in Texas. And so TMHP has a big role in it. You have the Medicaid managed care organizations, and you also have, but it's so they're the ones who set the rates.
Yeah.
So and so they are the single state agency for Medicaid in Texas, which means that they are the one source of
pain.
Yeah.
All right. Well, that's our home care update for current. I don't know what we call it.
Well, just where things are now, where things are going. It's always changing. The other thing I think I was going to say is that what I run into a lot of times because of all these changes, I run into a lot of people who wind up getting into trouble simply because they didn't ask the right people for help.
Yes.
They will get into the business, whether they be private equity or whether they be just somebody who buys a business because they want to get into it, and they wind up not accessing the right help. The thing that I've noticed is that there is help out there. There's affordable help out there. And if it's just a matter of plugging into the right groups and getting the information you need. But there are people who can help you succeed. And we deal with them all the time. And, but I have found that they are like the people that I'm talking about, that each situation that I've gone through here with each group, there's somebody that I can think of that has run into problems. And generally that person has not hooked up with either the right consultant or something like that to help them sort out their business, because it is complicated. I love
it when they want to go through a transaction, they want to like buy or sell, and they're using their general business attorney. I was like, oh, that's a bad idea.
Well, it's like a friend in Houston, Cynthia, says she does criminal defense work. She goes, yeah, you don't want to have the guy who handled your car wreck come and deal with your criminal defense issue.
Yeah.
They're very different.
Yeah.
So, that's that happens.
Yeah.
Okay.
All right.
But it's an ever-changing industry, and one of the constants is just keeping on touch. But it's managing the change is doable. That's the cool thing.
Yeah, you got to have somebody watching and listening. You got to be plugged into the community. So we hope to provide more value in that area. So we'll see how that goes.
All right.
Thanks
for joining us.
Thanks so much for joining us on the Home Care Experience with TNA. We hope you enjoyed today's conversation and found it insightful. You can find more episodes of the Home Care Experience wherever you listen to your favorite podcast. We'd love it if you could share this podcast with your network and/or leave us a review. It really helps us reach more people who are passionate about home care and hospice. Visit thehomecareexperience.com for links and resources in the show notes. Until next time, take care and keep making a difference in the lives of those you serve.